everybody. Welcome to our community call. We have been holding our community calls every other week, but we had a few meetings and conferences that got in the way. But we'll make sure to see you guys on a bi-weekly basis from now on, and we'll have some more interesting interviews lined up, so make sure to follow us on our socials. Today, we have a packed agenda. Like always, we'll start off with a brief overview of the state of DeFi. Brave has been posting really useful reports on the state of DeFi in yields and risk. We'll hear from Brave and Hugh talk about the market. And then Lee will give us an update about Nexus Mutual. We have been seeing great growth over the past months, and we finally reached over $100 million in active cover since earlier May, sorry. We'll go over some of the growth metrics, and Hugh will give us an update about the Covery deal. There is some more interesting contribution programs lined up, and the Grants and Accelerator program is very exciting. Brave will provide some updates from that front. By the way, if you stick with us until the end of the call, we'll make sure to give some nice POAP as a cute little memorabilia for you for attending this call. So make sure to tune in until the end so that you get the details on how to mint one. Okay, Brave, do you want to kick things off? How is the state of DeFi these days?
Yeah, well, first, good morning, everybody. I think it's been about a month since our last community call, and a lot has changed in DeFi since we provided an overview of DeFi yields and risks. If you subscribe to the State of DeFi Yields newsletter that I have, you'll notice that I've also been on a hiatus while I'm traveling. Kind of hard for me to post on Mirror while I'm traveling, but I should be getting a report up next week. But previously, DeFi yields in the crypto market at large was in a bit of a slump. Everybody was waiting for the ETF announcements. The last time that we were talking, things kind of like leveled off in crypto and DeFi in a whole. Yields had gone from these like record highs in the 20 to 30% range down to about the 8 to 12% range. But since the ETF has been approved, there's been more activity on chain. We've seen funding rates go from like low single digits back up into the 10 to 20% range, which has signaled some more bullish sentiment in the market, but that could also flip back the other way. So while things have picked up, there's still some hesitation in the market. I think people are still waiting for confirmation on some of the ETF news. But by looking at the benchmark yields on Vault's FYI, we can kind of get a feel for where yields are heading now. The average yield across the top 15 opportunities on Vault's FYI sits at 32.48% APY, and the average across the top 15 lending markets is 21.29% APY. So we are seeing yields starting to trend back up as opposed to the last time we spoke when lending market yields were between 8 and 12%. There's a lot more demand for leverage in the market. There are a lot of people that are still running the USDE or SUSDE loop where they're leveraging that, or people are still farming points and farming yields on liquidity staking tokens. Both of these things have been a big driver for yields as well. And while yields are trending back upwards, we're seeing that risk on chain is also going back up, whether it's in lending markets or some of these newer protocols on L2s. We've seen several hacks here in the last month. The most recent was Velocore, which is a protocol on Linnea's L2 that was hacked for 6.8 million after a fee overflow exploit. An attacker was able to drain, like I said, 6.8 million after conducting that exploit. Sown Finance, which is a Compound V2 fork, was hacked for $20 million after an exchange rate exploit took place. I had put out a thread on Compound V2 forks after this and how historically I think they are one of the most exploited forks that are out there. So while there's a lot of users that are moving their activity over to L2s like Base, Optimism, and Arbitrum, it's important to note that there are quite a few protocols in L2s that are forks, and forks come with added risk. So teams that fork a protocol's code may not be aware of certain vulnerabilities, so it's more likely that a loss is going to occur in a fork. We are working on reviewing some of the more popular forks on L2s, on Base and Optimism, and Arbitrum, so that we can evaluate those for a listing. And if we can get those up, we can offer more user protection for those popular protocols where people are earning yields. To date, we've prioritized listings where users have signal demand or where users are depositing a large amount of funds. This strategy has really helped us scale cover sales in Q2. And as DeFi yields continue to rise, we'll look for those opportunities where we can add new listings to benefit members who are buying cover through the Nexus Mutual UI or through distributors like OpenCover on L2s. Diving into the growth update for Q2, we've seen some pretty impressive growth in cover sales continue into Q2. In Q1, we saw growth from where cover sales were in Q4 2023, and we've continued to see cover sales rise and premiums earned rise pretty substantially. So far in Q2, the mutual has sold 98.5 million in cover and earned 875K in premiums based on data sourced from the full list of covers V2 query on the Nexus Mutual Covers Dune dashboard. I believe that number is higher now. I updated that, I think it was just like late last week. I updated those figures. So we've seen some pretty large cover buys that came in over the weekend too. So we're definitely well over a million in cover sold, and I would imagine we're over 900K in premiums earned in Q2. But based on the numbers that I shared, that represents an increase of about 32% in cover sold and 59% in premiums earned compared to Q1 2024. In Q1, we earned over 500K in premium, and I believe it was in April alone that we earned more in premium than we did in the entirety of Q1. So we've seen a big demand for coverage, and because of the way that pricing is handled in V2, where staking pool managers can set pricing, the average cost of cover that people have been paying has gone up, which has led to that premium growth as well. So since the beginning of the year, the mutual has seen a 3x in active cover compared to Q4 2024. Total cover sold has increased by about 69%, and premiums earned has grown by over 316%. So if you compare the mutual's earnings across cover premiums, investment returns, and RAM value accrual, the mutual is earning $1 for every $207 in TVL. That means that Nexus Mutual is earning more on a proportional basis than a lot of the major lending protocols out there. On a monthly basis, the mutual is earning more than Compound and Fluid. I put out a thread covering some of these growth figures as well on premiums earned and the investment returns on my profile earlier this week. But the main drivers for growth in Q2 so far have been bundle protocol cover and protocol cover. Those are still the two dominant cover products that we're selling. We launched bundle protocol cover 2 weeks before Q1 ended, and it's been incredibly popular. Bundle protocol cover has contributed more premiums than all of the other products combined in Q2, which is why we've seen such a large increase in premiums earned since Q1. Other important drivers of growth include OpenCover's growth in sales. So OpenCover is a syndicate built on top of the mutual that distributes protocol cover on L2s. They have been steadily growing their cover sales in Q2. So far in Q2, they've sold 3.57 million in cover, and they've brought in 31.7K in premiums earned. OpenCover serves to a primarily retail audience on Base, Arbitrum, and Optimism, as well as users that don't want to KYC and become members of the mutual but still want to buy cover. We've also worked with the EtherFi team on a point of sale integration for the EtherFi liquid vaults, which means that users can buy cover directly in the EtherFi user interface without first becoming a member. So by allowing members to buy cover without leaving Protocol's UI, we can drive a lot more cover sales. Based on what we've seen from EtherFi already, we've sold over 6 million in cover in just 2 weeks after this integration. So look out for more point of sale integrations in the future as we work with other listed protocols to make it easier for users to buy cover without leaving a protocol's UI. Sherlock has also been increasing their quota share cover purchases and expanding their product offerings, and the mutual plans to support their new product offerings going into Q3. Liquid Collective has also renewed their coverage with the mutual and increased the amount of cover they'll be buying on a quarterly basis. We're also working on some new cover products that we'll be launching here this quarter and next quarter, which we imagine or which we project will drive cover sales as well. So we are seeing material cover growth across multiple lines of business, with more cover products planned for launch here in Q2 and Q3, as well as new point of sale integrations. Our goal, again, is to 10x cover sales by the end of 2024, and I think we're well on our way. So keep an eye out for the Q2 2024 Insights report that we'll be publishing in July after Q2 wraps up for a more comprehensive overview of the mutual's growth. I also wanted to talk a little bit about some of the improvements that we've made in the Nexus Mutual UI for the buy cover flow. We talked about this last time as well, and while the Foundation and DAO teams are working to increase cover sales and premiums earned, we're also working on removing friction within the UI and improving the user experience for our members. So if you've bought cover recently, you've noticed the changes that we've made to the buy cover page in the Nexus UI. There's a new look and feel on there as well, so it's easier to browse products. There are categories now, so if you're primarily buying cover for lending protocols, you can filter and just look at lending protocols on the browse page. You can filter by those categories. If there's a certain cover product that you find yourself buying on a regular basis, like if you're somebody that's coming back and buying Pendle cover or cover for Spark protocol, you can set that as a favorite, so that'll show up at the top of the page for browse covers, so you can quickly find those cover products that you're using on a regular basis. And then if you select a product and you go to buy cover, you'll notice that we've improved the UX here as well, and we've added some new features. Like I said, we've added that favorites feature, which has been beneficial. And I know there's been more than a few members that have reached out about that and said that they really enjoy that. After the recent governance proposal, we've also added USDC as an option for covers. So if you want to buy a cover that's denominated in USDC as the payout asset, you can now do that in the UI. If you want to pay in USDC and receive a claim payout in USDC if you suffer a loss, you can select that right on the buy cover page for a given product. I'll cover that proposal once I get over to the governance section of the call as well. And then the other nice thing is you can clearly see how much total capacity is available in ETH, DAI, or USDC terms, depending on what asset you select. So you know how much capacity is available across all of the staking pools. So while we're working to grow cover sales, the Foundation engineering team is working on overhauling other sections of the Nexus Mutual UI to improve the user experience for people buying cover, people staking NXM and managing staking pools, assessing claims and filing claims, and more. So we'll have more updates on that progress over the summer. But I will hand things over to Hugh to give an update on the cover redeal. Hugh?
Yeah, thanks, Brave, everyone. So pretty exciting. We it took us a long time, have to admit, but we finally executed on the cover redeal, or the stage one, phase one of the cover redeal. So basically, we're in Cover Re is a reinsurance company out of Bermuda. They reinsure a whole bunch of different insurance companies, mainly in the States. And different portfolios of business, like more regular real-world insurance portfolios, so motor and home and liability coverage and a whole bunch of different things. And we the first stage of the deal is where Nexus is going to kind of invest. We have invested into their tokenized offering. So they're and basically we'll earn a return on that. So we have deposited some ETH into Aave, taken a loan for some of the investment, and used some of the DAI in the stables in the pool to make up the rest. And we transferred over 12 million in stables over to the fund. So that's been technically executed, and we've got also signed all the legal agreements to back that up. So that's a pretty big step, because one of the things here is it's effectively a way for Nexus on-chain capital to back some real world coverage. So that's pretty interesting. And we're expecting the yields definitely variable because it depends on the claims experience of the portfolios. But it's expected somewhere in the range of 18 to low 20%, which is pretty strong. So I think the other phase of the deal, which is going to be which we're working on at the moment with Cover Re, is where they will then transfer a chunk of the risk that they're writing into Nexus. And so that requires the Cayman regulators' approval to do that. So the first step is to start that formal approval process. We've already spoken to them, and initial indications have been positive, but we have to go through the process there. So so that's a pretty big step. There's always I guess quirks along the way as you interact with the real world a bit more. But I think it's a pretty big achievement to getting some capital, earning more yield for the pool, and secondly backing some on-chain risk. So yeah, pretty excited to have that live right now. Should I give a bit more of a broader update on foundation things as well?
Yeah, that'd be great.
Yeah, cool. So I think there's quite a lot of stuff going on. I think, as you've seen, the UI enhancements have been going out with the right cover flows, and a bunch of the other flows are being worked on right now. So I particularly like the new style. I reckon it's really smooth. So looking forward to that happening on the staking side as well, which is where I spend a chunk of my time. But yeah, I think that's going well within the team. I think. Brave mentioned we have this goal of getting like 10x cover growth by the end of the year, end of 2024, and there's kind of three main pillars to that. The first one is looking at like point of sale integrations and ways for people to basically buy cover more easily. And we launched an integration with DeFi where you can buy cover for their liquid vaults directly within the UI. So it's just a one-click add-on, which is pretty cool. And so we're looking to kind of expand that into other projects within the ecosystem rather than just having a link where they can come to the Nexus site to do it. They can actually execute the cover buy within the partner UI. So that'd be great. So we're looking to roll that out. So that's kind of like one stream of things. So like point of sale or embedded cover type options. The second stream of things is what we kind of like tailored or bespoke deals. We get a lot of requests from different people wanting either larger covers, trying to help source capacity for them, or for tailored products, whether it's slashing or something slightly different. And so we're seeing a lot of demand there, and it's definitely increased over the past several months. And we've got quite a few deals in the pipeline there that hopefully they'll start executing over the coming months. Take a little bit longer to get live, but we think there's significant growth in that side of things as well. So that's kind of the second stream, and the third stream, which Lee's going to talk a bit more about, but is looking to expand the number of syndicates or people building on top of the mutual, and that's probably a bit longer term growth trajectory, but still very, very meaningful. And open covers are a really good example there, where they're selling covers on L2s and probably selling. I haven't looked at the numbers very recently, but probably half the covers that we sell in terms of number of covers are sold via open cover. So I think that type of thing and just expanding out the distribution with multiple syndicates or groups building on top of us is going to be really powerful. So those are the three main strategies, three main go-to-market strategies that we're looking to execute on to hit the 10 times cover growth. So pretty much all focused on growth and scaling up. We've got the platform in the right spot, and obviously there's wider growth and interest within DeFi and crypto more generally. So very much looking to capitalize on that over the coming several years or however long this lasts. So yeah, that's a big focus from the foundation side. I'll hand back over to you, Lee.
All right, thanks, Hugh. Yeah, we're making a lot of progress on the growth side. There's a lot that's in the works. One of the initiatives that we started is the Grants and Accelerator program. So this is a DAO initiative that I'm working on with Dopey. We put up a proposal on the forum sometime in April, and we went through the governance process. This was put up to a snapshot vote, and then in May, members voted to approve the Nexus Mutual Grants and Accelerator program, which is a $3 million initiative to fund one-off projects and emerging risk businesses with the capital they need to build on top of Nexus Mutual. So this is part of our strategy to grow cover sales by 10x in 2024 and 20x here over the next couple of years. This program is going to be managed by a committee. It's a 5-member team that's led by Dopey, who serves as the committee chair. The other committee members are myself, Rox, who is the head of engineering on the foundation team, Hugh, and then Ray, who is the head of R&D. The committee has the discretion to award individual grants of up to $100,000 and accept teams into the Accelerator program and provide funding of up to $500,000 per team. If you look on the Nexus Mutual DAO website, you can see the grants page and the accelerator page. Currently, the bounties offered for accelerators are $250,000 for a team that goes through the application process and gets accepted. You could also see RFPs for the different grants. But on the grants side, there is $1 million dedicated to grants over the next 18 months. The goal of the grants program is to drive growth within the Nexus Mutual ecosystem. So by funding individuals and teams with the expertise necessary to conduct in-depth research, build out our technical infrastructure for new syndicates and distributors, teams that can improve the user experience and simplify the integration process, the mutual can onboard more risk experts into our ecosystem and reduce friction for people looking to buy cover and protect their assets. Ultimately, the improvements outlined in the RFPs and any outside grant ideas should contribute to material growth in cover sales. Again, this is on the Nexus Mutual DAO page. You can see the grants page. We have the existing request for proposals that are on that page on the DAO website. And also, we're open to accepting applications for teams that have ideas outside of the RFPs. But that main driver and our main priorities are focused on growth. You can learn more about our priorities and what we're looking for on that grants page on the DAO website. For the Accelerator program, there's $2 million dedicated to this program over the next 18 months. The goal of this program is to create new startups and support existing syndicates that are building on top of Nexus so that we can enhance our ecosystem. We're particularly interested in new lines of business or businesses that create new cover products that can distribute coverage, facilitate underwriting, or enhance risk management for the Nexus Mutual ecosystem. Participants in this program could include agents, brokers, underwriters, claim adjusters, data analysts working on risk modeling, data providers, protocols that want to natively include coverage, or protocols that are expanding on the mutual's core functionality. The Accelerator program is going to work a lot like a traditional accelerator where we accept people into our startup program. We incubate them for several months and then work very closely with them over the next year. So funding through this program is awarded on a milestone basis. If you have an idea for a risk business that you want to build on top of the mutual, or if you're looking to more widely distribute cover, you should check out the Accelerator page on the Nexus Mutual DAO website as well. You can get there right from the home page of the DAO website, but all of the information about that and some ideas for accelerators we're looking for are outlined on that page. So I'm going to be spending quite a bit of time on this, and so is Dopey. We're going to just doing a lot of outreach and looking for people that can complete some of our grants and looking for teams that are skilled risk experts or teams with different expertise that can start building on the mutual. I think the Accelerator program is a really great way to get more people building on top so that we can get more businesses like OpenCover that are helping distribute coverage and then expanding our product offerings. On the governance and investment committee update side, there's been quite a bit happening on the governance side. There's been a lot of activity on the governance forum, and I'm expecting more posts to come out in the next couple of weeks as well. So I'll just run through a brief overview of governance activity to date, highlight some upcoming proposals, and then share an update from the investment committee. The most recent proposal that went up for vote was NMPIP 223, which is adding USDC as an asset within the capital pool. This was up for discussion for over a month, and then last week this was put on chain for a vote. Members voted on this improvement proposal to add USDC to the capital pool so the mutual can sell USDC denominated cover. This is also a requirement for certain products that we're actively developing, and it's been a feature requested by members in the past. This proposal did pass, and USDC was added on chain yesterday, while the Nexus Mutual UI was updated today to allow members to buy USDC denominated cover. We have a tweet that's scheduled to go out here just shortly after this call with the details, but basically if you're looking to buy coverage for certain products, you'll want to use USDC. We've had people in the past ask if they can buy USDC denominated cover for MakerDAO CDP, SDAI, the SDAI cover that we offer, Spark Protocol cover, some of these things where the asset that you're looking to cover is DAI, and getting a payout in DAI when you're worried about the security of DAI is a little redundant. So with USDC added in the capital pool, we can also offer some new cover products, such as DPay cover, that's in active development. If you have USDC as the payout asset, we can underwrite cover for things like a DAI DPay cover or something like an SUSDE DPay cover. So that's not available yet, but actively being developed, and this was one of the requirements for that product to go live. So more on that in the future. There's also a proposal from the investment committee that is a request for comment. It is a divestment framework. I actually believe that while we were on this call, that this has been updated to an NMPIP, but the divestment framework has been on the forum for a little over 2 weeks. And Ray, who is heading up the investment committee, posted an RFC outlining a framework for divesting from STETH and RETH in the capital pool to meet certain obligations over time. As part of this framework, the investment committee is proposing that the mutual maintain a minimum of DAI and ETH in the pool to provide liquidity for claim payments should there be a loss event, 9,000 ETH as liquidity for RAM redemptions, and then 3,000 ETH to be used as collateral available for the USDC loan that's associated with the cover deal. As RAM redemptions continue, the amount of ETH in the capital pool will reduce, and so the mutual needs to ensure that we have enough ETH liquidity to honor redemptions and facilitate claim payouts should a loss event occur. So this proposal on the forum outlines when STETH or RETH would be redeemed for ETH in the capital pool, and under which circumstances we would start to divest. So it's a pretty detailed post. The investment committee has put a lot of thought and foresight into that post. So I recommend everybody check that out. You can find that detailed breakdown on the forum. And again, I believe this is now in the NMPIP phase. So this will be up for review for at least the next 2 weeks before it goes to a vote. On the investment proposal side, there are several investment-related proposals that I expect to be posted on the forum here in the next couple of weeks. The investment committee has given me an update here that they are working with some different teams who are looking to discuss how we allocate the idle assets held in the Enzyme vaults. So keep an eye out on the forum for those RFCs. I believe there are going to be 2 that'll be posted on the forum, and then there may be some other proposals related to treasury management coming on the forum in the near future as well. But once those proposals go up, we'll share announcements on Discord and Twitter. So if you're following the Nexus Mutual DAO account or the main Nexus Mutual account on Twitter, or if you're in the Discord server, just keep an eye out over the next couple weeks for those proposals. On past DAO proposals, we've already covered the Grants and Accelerator program. I also wanted to just give an update on NMDP number 5, which authorized the creation of the Nexus Mutual Community Staking Pool. So this was a continuation of basically a governance vote that happened a couple years ago about creating a staking pool where the Treasury, the DAO Treasury, can open up capacity for certain products to help with growth, and then earn staking rewards based on cover sold. So this was approved by members in May, and the community staking pool was created. This is pool number 23, and you can see that on the staking page in the Nexus Mutual UI. And there have been cover buys routed through that pool, so that pool is already earning 1.73%. So you can see that it's also a public pool, and this should help us scale cover sales. There's been multiple instances where capacity was constrained in other pools, and pricing was very high in other pools. So cover buys have been routed to the community staking pool. It's been really great at opening up capacity. As new listings come online, it'll help us open up more capacity and help us find out what people want to buy cover for while generating some returns for the DAO Treasury. Members also voted to approve NMDP number 4, which was a grant proposal that OpenCover had put up. They were awarded 230 NXM to offset gas costs and help them scale cover sales on L2s. And then to date, OpenCover has grown their cover sales substantially in Q2. Last year in the fall after they launched, cover sales were steady but not very high. And in the last 2 quarters, they've substantially ramped up their cover sales. So, we're seeing a lot of growth through OpenCover. Their growth team is working very hard to get integrations in different protocols and L2s. And so we are seeing a lot of cover buys being routed through there. So again, they're just a really great partner building on top of the mutual. And on the investment committee side, they've been working again with those various teams to post proposals on the forum. They've been fielding questions and providing these teams with guidance on their governance proposals. So working to get those in good shape so that they have all the information that members need to make decisions and ask questions. And then the IC has also started providing monthly updates on the mutual's investment earnings, which you can find in the investment category on the forum. We've also been sharing these on Twitter from the Nexus Mutual DAO account. So based on these reports, in March, the mutual earned 157.2 ETH on investments, and in April, the mutual earned 141.1 ETH on investments. The main newsletters should be posted in the next week or so keep an eye out for that. But they've given a really good overview of flows, how much ETH is left to Capital Pool based on RAM redemptions, how much is coming in through cover premiums, and then how much we are earning on our investment assets and what that looks like over time. So you can find the latest on the investment committee's progress on the Nexus Mutual Governance Forum as well. I will hand things over to Sam to go over the last week in numbers. Sam?
Thanks, Brave. Let's review the last week in cover sales. Last week, the mutual sold $16.6 million worth of cover, and our members earned more than $85,000 in fees. Some of the largest cover buys were for Pendle, Aave, and the rest were less than $1 million worth of covers. Like we mentioned earlier in this call, our active cover amount has seen more than $100 million since later in May, and we have been seeing quite high APIs with some of our staking pools, which Brave time to time shares more information about. And we are just getting started with a new project to visualize the staking pool information and cover sales information a little more polished on our socials and also on the Dune dashboard. So keep an eye on that as well. If there are no questions about the last week in review, I'd like to ask the listeners here once again if they have anything open that they want us to give an update on, or if they have any questions that Hugh, Brave, and myself can answer. If not, I want to give some details about how to mint a POAP that will serve as a memorabilia for you to attend this call. Please make sure to DM me or the Nexus Mutual DAO account, letting us know that you like to have a POAP. And by the way, I'm sorry, my cat is kind of crazy right now. Or you can also reach us through Discord if that fails for some reason. Or you can also DM me on X, and I'll make sure to get you the info. If you have any questions about minting the POAP, let me know as well. Thank you, everybody, for joining us today. We'll see you in 2 weeks' time. Take care and stay safe in DeFi.
All right. Have a great day, everybody. Thanks for joining. Talk to you later.
Cool. Thanks, everyone. Bye.